Tocando de baseus iPhone.
Another delay on my live stream. I mean, just catching this push down, very much expected after taking out these relative equal highs on the 15-minute. Actually, this should be around here. Those were the highs that were taken. Looking on the 1 minute. This high and that high over there. And before anything, by the way, good morning to all of you. We got Fed Powell speaking today. I think around 10. Just check the news. Be very careful. I'll be taking mostly scalps. Yeah, 920 basically. 920 is ongoing if he's still speaking. 20, 9:30 there's news. Medium impact news at 10 and 11 a.m. It's a lot of news here. After the big move up yesterday, all day, 300 points on that move, we're probably going to be looking more bearish than we are bullish. Overall on the week, I maintain my bullish bias, but maybe today is the day where price will may trade below weekly low. I don't expect it to be honest, but it's a possibility. And I would like it actually to stay above the weekly open. We are bouncing off, by the way, a weekly and a daily SIBI. So this kind of gives us a lot of confirmation that price should be heading down. Probably taking out the weekly open. What we're waiting for right here, right now, is we're waiting for this 15 minutes busy to see if this will be respected or not. Based on that, we'll see what kind of trade we'll be taking. Are we gonna go take a quick buy trade from down here all the way up to this fair value gap? Or are we gonna wait for a bounce and a retest of this, inverting it into a 15-minute inversion fair value gap and taking a trade from this fair value gap to this fair value gap, which is also a 50% of the dealing range. Just want to point out something here on the 15 minutes. I don't know if you guys seen the video, my videos, any of the live streams this week. I had this green line here. It says DOL, the daily draw on liquidity. I was predicting this on Monday, that price will trade reaching out for this, and then above it WDOL, that's the weekly draw on liquidity, also predicted the price will reach for this, and I did mention that it may even go higher. This weekly DOL is the lower point of the weekly fair value gap, the lower level, the lower end. The midway point of this weekly fair value gap is this line here. No, that's not it. This is the line, this gray line over here. That's the consequent encroachment. If you go on to the weekly, this is probably a wick. This move here is just a wick and it's coming down. Let me show you. Kind of messy here, but I'm not going to take out all these annotations. I'm just going to zoom in, see. This is this week's candle on the weekly chart. Price goes up. There's the wick. It's still inside it, the weekly CB. And currently price is just, you can't really see it on a weekly candle, but is slightly above the it is sitting exactly, the body, at just slightly below the consequent encroachment, which is the mid-level of the weekly CB. Back on the 15. I do expect price to at least trade down to this. It may trade down to this fair value gap or this fair value gap, but at least it's going to trade. I expect it to trade down to this. I don't expect this fair value gap to be respected, the 15. During Asia session overnight, previous day, Tuesday's high was taken. Wednesday's high was taken. And Monday's high was taken. Basically, all the past 3 days highs were taken. Down here, previous day, this is yesterday's low, and this is the low of Tuesday and Monday. Two fair value gaps sitting right at these lows. I'm gonna go ahead and take out DOL. Daily and weekly DOLs. Won't be needing them anymore. I still have them noted in my notepad over here, so I'm taking this fair value gap out. I'm actually gonna keep it just to see how price reacts, depending on how it closes. Yeah. So we'll see how price reacts right now on any of these fair value gaps. I still expect price to go down to that 15-minute BISI where the red line is. On the 5-minute, no retracement whatsoever into a fair value gap. Small fair value gap here, nothing. This large fair value gap, nothing. 15-minute, same thing. One big fair value gap formed due to this big down candle. On the 1 minute prior, of course, 9:30, we go into this fair value gap and boom, after taking out buy side liquidity. But because we don't trade the news, so we sit and wait. The market or the algorithm tends to take it into a direction where like to wait for this 15-minute candle to close. Plus there's news at 10 a.m. So let's see if Powell has finished.
As necessidades humanitárias no Haiti atingiram um nível sem precedentes desde que os confrontos armados.
Hello, everyone, and welcome to the 10th Annual U.S. Treasury Market Conference. 10th Annual is a phrase that generates a bit of surprise and much pride. Team, these markets need to keep functioning at a high level, and we all have a stake in making sure that they do. I remain wholly dedicated to that goal. I wish you a productive and educational conference.
See what he had to say.
And welcome to the 10th Annual. It is surprising because it does not seem like the first of these gatherings, which I was honored to play a role in organizing, was all that long ago. But we can also take pride because the conference has proven useful and important for a full decade, as I expect it will do for many more years to come. Much has changed in the economy since we first gathered in 2015, but the importance of the U.S. Treasury market has not. As you all know, this market is the deepest and most liquid in the world. In addition to meeting the financing needs of the federal government, it plays a critical role in the implementation of monetary policy. It is no exaggeration to say that the Treasury market is part of the bedrock of our economy, and indeed of the world economy. The October 14 flash crash and the subsequent publication of the Interagency Working Group report on that event, firms were playing in it. It also showed the crash.
Okay, nothing really significant. So let's focus on the charts. News coming out at this moment.
Tocando de Baseus iPhone.
It's accumulating trades. I expect it to be accumulating for more short trades. It may wick people out. These relative equal lows, then go higher, and then those who are thinking to go long based on support and resistance. This 15-minute candle here, which was the second 15-minute candle after market open, closing below the consequent encroachment of the 15-minute BISI, it gives us a sign the price wants to trade lower, and it did wick lower, pierced into this 15-minute BISI sitting just lower. I would consider this and this, but I would overall consider the lowest one of this whole entire big move up. We still have one here, which very possibly price will reach to, which sitting below at sell side liquidity over here, which is also below previous day's low. This is a very key point of interest, extremely. So very possible. This kind of looks like the market maker model, basically. The left side of the graph or the charts, and then the right side of the chart, and then every single fair value gap here, and also let's say on the 1 minute, will be tested, will be a point where price will retrace, and it will be a point of entry every time if you want to add trades or even take profits or take partials, all the way reaching, let's say, to this fair value gap over here, taking out the third day, which is Monday's low. Let's see some retracement up to into that volume imbalance. It's also a very small fair value gap sitting up there. I'd like to see price. Let me zoom in. Trade back into that before selling off. That's it. It's slightly wider. I need to fix it. OCD on this thing. Has to be exactly on the spot to the tick. So yeah, if it reaches up here, I'll be confident and I'll take a low trade at the low of the fair value gap and a volume imbalance at the same time. And then expect price to go lower. Finger on the trigger. And there you go.
Order filled.
We're filled. Stop loss up here. Less than 2 minutes remaining on the fair value, 15-minute fair value gap. We'll see how this candle closes. We'd like to see this candle close below the midway section, midway point of this 15-minute BISI, giving us further confirmation that price should trade lower. If it closes below the 15-minute BISI, that's even added confirmation that price will trade lower, reaching for this next fair value gap. And that would be a trade that we would be content with from this fair value gap turning into a inversion fair value gap to this next 15-minute fair value gap. Let's see what happens. We have, we only have 2 contracts. Okay, it was meant to be, I really wanted to take 3 contracts, but I may add another one. Five-second countdown on the 15-minute candle. So far looking good. And it does close below, so there we go. I'm gonna take this out. And we'll probably add another contract if it comes back, or maybe 2 if it comes back. Same stop loss. I'll keep TP. That's about right. If it does go back up there and fill it, then we're good. We'll have 4 contracts in total. If it doesn't, then we should be content with what we have. 2 contracts, I guess that's what's meant to be. If I do get a fair value gap somewhere in the, like halfway through this, probably add these 2 contracts down there. And then just basically adjust the stop loss and take profit. Zoom in the 15-minute. Just a slight analysis here. Basically, price closes below it, tests it, and we should see price trade down. Price could wick, sweep these wicks. It could even sweep these wicks over here. Probably adjust our stop loss if necessary, just to give an impression that price wants to go higher. Until now, I still have, in my opinion, to me, everything says that price should trade lower. taking one contract off. Somewhere here. $10.22, 5. Boom. Fair value gap. This could be. This might as well be the silver bullet of the day. Just move my stop loss slightly lower after breaking these lows. Once we take off partial, one contract partial, we'll be moving stop loss. Actually, I moved the wrong stop loss. This stop loss has not been filled. Once this partial has been taken, then we move our stop loss to break even.
Order filled.
Boom. So now this goes here. Modify this to 1. And it will automatically change stop loss. I will go ahead and remove this sell limit. Basically we have one remaining contract. I normally take TP at the top level of the fair value gap, whether it's a BISI or a CIBI, just on the edge. I want to see how price reacts this fair value gap. If I see some kind of rejection, I may add one more contract. Keep my stop loss above the second candle, 1 point. My TP, same as. I may move this slightly higher. Just wanna think about it for now. Where's my sell limit? I accidentally deleted it. Sell, boom. Sell limit somewhere here. Stop loss here. And TP, let's see. Just move it out of the way for now. The reason I put it over here because this is actually the 50%. This is the 50% level of the dealing range indicated over here. On the 15 minute. Basically the dealing range of the higher time frame. That's exactly why. It may not reach it. If it doesn't, if it starts to react, I'll just basically take it out. 15, I have a few seconds left. I'm gonna go ahead and take this out before the next 15-minute candle. And we're done. I'm going to take this out for now. I would say I'd be content with the straight today. I do expect price to go even lower. Boom, bang, bang. I want to go on a 15 just to get some reading and see where. Now on this 15-minute, this 15-minute BISI, we want to see how price is going to react.
Order filled.
Thank you. I like the sound of that. Of course, I don't like the sound of the telling me that stop loss filled. So yeah, that's the 50% level of the dealing range. This low and that high. This low that took out this most recent low, and that high that took out that most recent high. From what I've learned from ICT concepts, that would be the dealing range. That does not mean that price is not, basically anything above this 50% level is premium. that does not mean price is not going to continue down. We are at 50% level between premium and discount. Very much expected price to reach down here to this 15-minute BISI. Furthermore, this 15-minute BISI I just say this one, most likely this one, because this one that started the last big move up, the most recent big move up, and now it's just basically that market maker model, the price with the left side of the chart and then the right side of the chart. Let me explain to you, just to show you an example of how price goes back. So this was a 15-minute SIBI, sorry, a 15-minute BISI, correct? What usually should happen on a 15-minute BISI, price should basically test it, bounce off of it. What happened to this 15-minute BISI? It has been inverted. It's become a 15-minute inversion fair value gap. Price closes, if you look closely, closes below it. Let me take out this. Let me keep that because I'm going to need it later to explain something. Closes below it. Really, if you look at closely, the body is closed slightly below it, giving us more conviction that it wants to trade lower. So, and then the next candle trades back into it because it's treating it as an inversion fair value gap. So it trades back into it, and then boom, trades lower. Now, this became an inversion fair value gap. Now this, I expect the same thing to happen with this. All the PD arrays that were on this side of the chart will be used as points of interest on the right side of the chart. All the PD arrays on the left side of the chart during this move up will be used as points of interest, whether they're going to be support or resistance, basically. Act as whether it'll be some kind of retracement on lower time frames and then a bounce back off, even on the high time frame, like this here, this wick here inside, testing it, that's a slight retracement before going down. And now if this 15-minute candle closes below this one, if the body closes below this one, then the next one we should expect it to trade back, wick into it, and then continue trading down into this fair value gap, or probably I would say out of these two fair value gaps, I would choose this fair value gap because it has not been tested at all. This one has been tested on the way up, so this one here has not been tested. This one was not tested. This one here was tested slightly, just on the top end. This one was tested. So I would expect mostly this fair value gap here to be tested and probably inverted, reaching all the way down to this fair value gap, which takes out previous week high, which has been taken out, goes lower than previous week high, lower than yesterday's high, lower than the day before that's high, on Tuesday's high, lower than Monday's high, and my ultimate TP for today, or for this move down, is in this fair value gap. Two choices between this one and this one, but the ultimate would be this one, going even slightly lower than the weekly open. At the moment, we're gonna have to see how price reacts off of this 50% level and that 15-minute, because we may trade back up, test this unmitigated 15-minute SIBI, and then back again, because we are at the 50% level. We've actually gone even lower. We are below 12 a.m. We are below 8:30. So very possible for price to trade back into this fair value gap before going further, maybe during PM session, all the way down to this 15 minutes BC or this 15-minute BC. Resting over here, which was tapped into slightly, it needs to be filled completely at some point. And I expect that point to be today. Today or maybe tomorrow, but I do expect it to happen today. So now basically we have a trade. Just sit down. 10:30, 11:30 again. We will be ending the stream. Actually, we may even end the stream. We'll see what happens. I'd like to wait for a little, just to see if we can get maybe see what happens with this trade. Is it gonna react, or is it gonna just go? Continue the low move. I mean, we got just exactly at the right place. I see price now reacting. This 15 minutes busy. This does not mean that we are going to go out and take out these highs resting above here. I don't need this sell side anymore. My ultimate sell side liquidity will be these lows. And these lows. Relatively equal lows. Go real quick on the 1 minute. That's where we took our trade. We entered at this fair value gap. We took one off right here, and then the final was right here at basically 77 points. One trade, two contracts. Which is great. Great result. This is why I wanted to show you. So basically, where's the left side of the curve? Say this is where it all started, this big move up. It's almost difficult to see this on a lower time frame in one screen. I'd need a humongous screen. If you look carefully, I'll give you an example here. This would be a perfect example. This small fair value gap here. Extend that out. This, of course, would be a 1 minute BISI going up. Price trades above, comes back, tests it. On the right side of the curve, what happens? Price trades below it, trades back into it, goes over it, taps into a CIVI, and this here was inverted. Just like on the 15-minute, it's sitting inside a 15-minute fair value gap, inside the 15-minute gap. So this 1 minute also inverted. This also just another confirmation where you could take, if you took one entry here or you took an entry here, this is just basically either to take a partial, or if you want to add to your entry before continuing on the way lower. Just want to clarify that. And this is maybe one of the best ways to trade a big move up and then trade the down move, or vice versa. Basically, there's a big move down, you trade the big, the opposite move up, and you use those points of interest like fair value gaps, which are to be inverted into inversion fair value gaps. Right here, this is what price does. At the 15% level, 50% level, price trades back, giving buyers over here trading support and resistance, support. Let me show you with the lines. Let's say we're sitting here, so those support and resistance, support, taking a trade thinking that this would probably go up, and then what it does is it just fills in this fair value gap and then trades lower. And then stop loss would be somewhere here, so sweeps the loss, that's the stops, and takes people out, the retailer. Now back on the 15, obviously, now that we traded, this candle closed below the fair value gap. I'm not going to take any more trades. I'm content for today. I've just decided, plus I got other work to do, and I might even end the trade, the stream earlier. So basically, this 15-minute BISI, as expected earlier, I do expect it to be turned into an inversion fair value gap. Basically this, I expect it to be inverted. But we're gonna wait and see. I'll give it the next 15 minutes and I'll end the stream at 11. Just to basically satisfy my curiosity. Just another 15 minutes of tape reading and observing price action. Rejecting this 1 minute fair value gap. And trading into this other 1 minute fair value gap, which also is a volume imbalance. Volume imbalance sits right here. Trades perfectly into the volume imbalance and then boom, shoots down. Everything going as we foresaw it at the beginning of the stream. This new 15-minute candle, this again, I just said it, turned into an inversion fair value gap. In such cases, if you had multiple contracts, you could always leave one contract basically to fight it out until the last point. Wherever you think your ultimate TP should be, in my case, it's down here. Sorry, in my case, the absolute ultimate would be down here, this 15-minute BISI. But it could kind of stall around here and take out, basically wick the sell side liquidity out and basically chill here. But the absolute ultimate would be down here. Why I say this, because this basically started that last move up. It comes down to it and it could go lower. These are relative equal lows. These here, 1, 2, 3, relative equal. They're very, very close. They need to be taken. Based on the price action from yesterday and today, generally this past week, I expect price tomorrow to not to actually do much. I expect it, tomorrow's Friday, so expect it very much basically consolidate mostly. So if we do take a trade tomorrow, probably be some super scalp. Today has been fine, content, 77 points. Two contracts, say around 200, just over $200. It's not too shabby. See, fair value gap, boom, retest, volume imbalance, and then boom, another fair value gap. Trades into it, and then boom. And where are we heading for? We're just skip this. As I expected earlier, for those of you who are watching, and for those of you who are not even tuned in, if you do watch this later, I said it would tap into this. It would look most likely to look for this rather than this. It just went through this and into this fair value gap on the 15 minutes. This has been tapped into, and they become one, they're very like one on top of the other, so they generally go for the lower one. And then ultimately we have one right here that has not been tapped into. I would expect this actually to even go tap into this, and ultimately this, and as I said earlier, take this out, the very ultimate drawn liquidity for this would be this 15-minute fair value gap. I want to go on the weekly real quick before we end the stream. 5 minutes. Show you why we knew price, or we expected it to excuse me, to trade lower. For those of you who missed it, you can go back in the beginning of the stream. Price on this higher time frame, on the weekly higher time frame, is reacting off of two fair value gaps, a weekly SIBI and a daily SIBI. Price reached all the way up here, wicked, and then reacted, took out these relative equal highs, 1, 2, 3 on the weekly. All the stops that are resting here have been liquidated, and then trades down. Where do we expect it to stop? I expect to stop around this level, basically slightly this level here where it is right now, and slightly lower, maybe midway of this wick, the weekly wick. %50 of this weekly. $21.35. Let me go on to the daily. You see the daily, how it's reacted on the daily CB. Boom, it's a huge wick. On the 15 minutes, 21.35. That would be right here. It would pretty much 21.35 is the low sitting below these relative equal lows, where sell side liquidity here, and it is the low of the dealing range. That's where the dealing range point started. This is the Fibonacci, just to measure from the low to the high. So this price, it sits at 134, so it's slightly above it. It will most probably even pierce it just to take out the lows. And coincidentally, what do we have just above this level? I mean, if we look at this, it's the low of this fair value gap is 151. So let's say even if it does not reach to 135, which is right here, just 1 point above this blue line. This close, extremely close proximity, is that or is that not enough for you as an ultimate take profit target? Knowing that beforehand tells you that you could take a trade and be comfortable knowing that it will stop around here. You could keep your whole trade if you're taking multiple contracts, or at least it could tell you, let's say you take some partials, 1 or 2, 3 partials, let's say you have 4 trades and you took partials, you could leave a runner to see if it will hit that or not, trailing your stop loss lower, 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 bringing it over, let's say to an ultimate, to a most recent fair value gap. In this case, let's say this one here, which has not been tested and currently is being tested, was never mitigated. Showing you again. As expected, this 50-minute fair value gap, 50-minute BISI, closes below it, has not even retested it for just to basically invert it as a fair value, to turn it into an inverted fair value gap, and now it's gone into the second 15-minute BISI, or in this case the third one, 2. There's actually a bunch of them here. It's one, but these ones, because they've been tested, price just went through them, did not even look back, and ultimately at 135. Anyway, I said we're done today. I'm gonna go ahead and call it a day. I hope you guys enjoyed this live stream. It was a beautiful trade, 77 points, just above $200. 2 contracts. Unfortunately, it was supposed to be 3. We would have made more. We wanted to go in with another 2 contracts, but that didn't happen. It didn't hit the point that we wanted to. We could have gone in early, but I'm satisfied with 77 points. That's an excellent trade. At whatever level you think, even if it was just 1 contract, that would have been an excellent trade for, say what, 1 hour, 2 hours, basically 3 hours. How could you go wrong? Thank you for tuning in. For those who tuned in, for those who haven't, please do check it out if you were interested later. It will be on the YouTube channel. I hope you found this interesting, useful in some way or another. And till tomorrow, we'll be live streaming. Take care. See you then.